Yo, 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 what's up, amigos? Um, Putting out a lot of content. So, in this video, kind of going to talk about how I made 3,600% in a trade, but it could have turned out to be 6,600%. And if you guys didn't see in the other videos, I try not to make videos where it's like show off, boost off, because I've gotten my ass kicked enough to know that that's not the right thing to do, and the market humbles you when you like kind of brag and stuff like that. But I do recognize that I am really harsh on myself. Like, I swear at myself. I'm very, very tough, and that I need to incorporate some sort of a appreciation, thank you note. And then one of the other things I realized, big thank you to Stan Guzman from 7 Points Capital, is that it's important to reflect on your strength. So in this video, I'm going to share why I was short the market. And also, big shout out to Mike Katz too. Mike Katz is probably the reason why I doubled up and tripled up um, on the. It wasn't a lot of shares, it wasn't a lot of calls, but the thought process and the theory. I don't want to. Yeah, I'm not gonna go with that. I was long. It wasn't. The percent sounds really cool, but in terms of dollar wise, it didn't make a lot. But always seeing all day traders tweets where it's like a WTF option or something like that, where stock goes. So I just let it roll for a little bit. So I was long UVXY, so that's what I'm going to talk about in this video, for the sake of my own benefit, and so I can what I can learn from it. I want to also focus on the things that I did well, why I did well, and then I would recommend that you guys do that too, and always try to come from a good place as opposed to a show off place and things like that. And the reason for that is if you don't, market's gonna slap the crap out of you, and then market will teach you how to be humble. So that's what the video is gonna be about. If you liked it, enjoyed it, and you found it beneficial, uh, give it a like and a subscribe, and most important of all, share it with somebody that you think would benefit from it. From a newbie guy that's not a licensed financial advisor but has gotten his ass kicked many times. So I would think hopefully a little bit of value add. So I was long the market and I made 3,600% in on the play. And I think it was probably my career's biggest percent winner. I'm not 100% sure because I don't usually track this kind of stuff. Uh, but I'm pretty sure it's up there. It's just unfortunate. I didn't make massive amounts or I would have remembered. But it was definitely a cool experience. And I did have conviction in it. So when did I start? I think I started in January and February. So how did I? And I used the options to go long. So how did I know that the market was gonna crash? The answer is I didn't, and I didn't know coronavirus was gonna come. Not a psychic. I wish I was. No, no. I like the challenge. I don't wish I was a psychic. I love the challenge of trading. So why did I take a short position, or why did I take a short position in the market, and which basically means that I was long UVXY, and I had developed it in a sense. And so why did I take it? I don't take stuff out of luck and things like that. So first off, I've been trading for 12 years, and my strength lies in swing trading and understanding things. And the complexity of stock market is you can never understand. So sometimes you have to understand that you're wrong So you have a bias, but you you can't be stubborn with it, or else it will just hurt you really bad. So I was thinking to myself. So this is, as anybody knows, UVXY is a leveraged ETF, and it has a time decay on it. So if we go back, almost always it will wash south. Like if we go way further back, it would be like, you see, what is this, like 24 million or whatever. And because it has time decay built in, it will always wash down. So it's not a stock that you want to long. And because of that, I longed it. And what I mean by that is it gave me an opportunity with options to buy really small amounts in smaller quantity, where when I did my math correctly, is if it had worked out, it should have given me 50 to 1 RR. Once I go in the money, I lose track. I don't really know how much RR I gained. Yeah. The position size, because it was not my A++ setup, this was not something that I was good at. I didn't put a lot of size in it. So just roughly speak on what I did, why I did it. So started the short in January, February, and I think my first entry was around 60 cents. No, it could have been I think it could have been $1.20, and then I added at 60 cents, and then I added at 90 cents or something like that. So I posted this. This is with my friends, amigos, from a few months ago. I posted in March, and I posted somewhere here. I don't want to go through the hashtags. I posted somewhere there, if I look through, that hey, I took a long position on it. You know what? Let me see. Okay, so here, what I did is I put the name and then the hashtag, and then I went long. So it looks like I was long from January. On February thing, I was like, too bad. And I was long from UVXY. I'm building a lot of position on UVXY. This was my risk. Adding, yeah. Okay, so this was my thought process. I'm short the market half month, 1 to 2 months ago via options. Would have made 15 had I picked the correct strike. Yeah, so this is what it was. So I was long the UVXY. My memory serves me correct, thankfully. So I was long it at around when the UVX was 10, and in my head, I didn't know that I thought it was 500 to 1. Maybe that was like an extreme exaggeration. Not an exaggeration, but it was a potential, but it was not a realistic potential. What I was playing was 50 for 1. So I was like, okay, I'll just put a small size. It's not a big deal if it works out. Cool. So I was longing the UVXY, and here I was complaining to myself. I was like, man, I would have been up so much had I picked the correct size in February and things like that. But I didn't take any profits. So I don't know what the heck this date is. So this is where it's at now. I believe. I believe this is the same one. I'm not 100% sure. I just selected June or May or something, the $38 strike price in UVXY. So that's what happened. I left it, and I think I took my profits at around $24. So from my lowest average, I think, to the highest average, it it was probably like 3,600%. So, which is something a bit to be proud of. From a dollar average, I guess you could say it's from 24. It's less, but I don't give a shit. It's just something that I wanna provide some self love to myself and be like, yo, good job, because I'm very rude to myself when it doesn't when I do bad. So this is where it's at. Potentially could have made 6,000%, and as of tomorrow, probably would have made more because market's gonna potentially crash. So why did I take the long? So the long thought process was, one of the thought process here is that I didn't even know, I don't remember that, but as you guys saw, what I do remember is thinking, well, if it works out, it's gonna give me 50 to 1. If it doesn't work out, and I think here, February 28th, I was complaining because it's at $21. Because I thought it would go super parabolic, and here it didn't go up that high. I don't know what the prices were, and I was like, man, if I had picked 20 instead of 30, or it must have been around here. Yeah, it must have been around Washington. I was like, oh, if I picked a different, it would have been a lot more. But I didn't want to pay a lot. So I went long around 10, and why did I go long? The reason was the market was leveraged. I've been trading for about, I don't know, 10, 12 years. Went through a lot of different market caps. That's another day's story. But the market, I felt, was extended. There was leverage problems. And yes, statistically, quote unquote, the market, uh, there's an uncertainty, market doesn't like it, but not on all election, market washes, etc. But as you guys know, I'm not a statistical trader. For me, it's all about context. I didn't know coronavirus was happening. So the China deal issue, I thought it was something problematic. And I did have a feeling, I had a feeling that they would fix the problem before the election. But the uncertainty, the China deal with all that jazz. So it's all about context, right? So with that stuff combined, the China deal that was going on, and how political system works, it's when the election's coming, they're gonna. I don't. I may get some hate. I'm not a political person. I don't vote. I don't want to spend my time and energy on that aspect. I don't want to get into that topic. But the point is, from my perspective, I think politicians tend to lie and they'll say whatever it needs to be just so they get to the position where they want. So they'll say whatever, and then when the time is done, they'll do something else. So this was one of my thought processes why I took the short position, why I did end up making 3,600%, is because I thought they were going to correct it. But once it gets near the election, there would be some problematic, there would be some uncertainty. That in combination with, I know market was very extended. There was a lot of real leverage, a lot of greed going on, a lot of index buying. Everybody was just constantly buying index, and they're like, you can't go wrong. It's better than putting your money in a hedge fund. You just buy the ETF, just buy on every dip, buy on red dip, and it will work out. And it has, right? The market has worked out for the longest time. It has, and then that's the time that it doesn't. Look, every single dip was bought, every single dip was bought, and every single dip was bought, always, for ages and ages. So, yeah. So that was the thought process, and that's why I thought I would get like a 50 to 1 R. One of the mistakes I made, again, there's always room for improvement. One of the mistakes I made was, I don't think, in hindsight, even without hindsight, I don't think I picked the correct exercise price because it was a guesstimate. I should have done a better job. Did that? I thought, I thought with a little bit of fear or anything, it could instantly go to 30 or 20, but it didn't. It went to 12, and I was like, oh, the market washed, and I was like, oh, nice, it's gonna go up, and it was at 12, and then I went here, and I was like, yay, but then I was like, I picked 30. I was like, what the frick? So every day I was like, oh my god, time decays on it, horrible. So that's why I longed it. It was a combination of knowing that the market is super leveraged. There's a time to pull. There's going to be a pullback. There's a lot of uncertainty going on. The election is coming, and everybody had the mindset buy the dip, buy the dip, and that's how I made 3,600%. And I could have made 7,000% and probably more. And in the future, hopefully, I'll put on bigger size so that I could be genuinely more proud of myself. And how do I put on a bigger size? That's tough because the time decay on these things are horrible, horrible. And I know a lot of people have tried shorting the market in the past. Luckily, I didn't, and this was, as far as I remember, this is one of the in the long term. When Obama was around, I don't think I tried shorting the market, um, but I did, and it has nothing to do with politics. It was just, uh, I don't know what my thought process was or why I didn't. I don't remember. So how do I benefit from this, or how do we benefit together moving forward from this? Okay. So UVXY. So with puts, because the implied volatility is so high, it washes slowly, but it's so dangerous to short the calls. But you could short the equities here. So when the market washes, I am planning on, of course, as you guys may know. First off, there's like only 20 people gonna watch this, but I hope you 20 people benefit from it. First of all, the second thing is, so the 20 people that whoever watches it, if you guys are followers on or follow on Twitter, you know that I am trying to build a long-term position. I was trying to get rental properties that didn't work out. Now I'm thankful that the market pulled, so I'm trying to build a long position. So how can we benefit from it in the long term? The brain says to take lotto puts all the way out, but implied volatility is way too high. But the market will wash as we get a vaccine or something, and UVXY will go really down. You could short the equity. So I'm slowly building a long-term position, but ever since that cut rate that just happened an hour ago, I'm probably not going to, or I'm going to cut my small position. I don't know. I'll reevaluate. But I'm definitely interested in a long-term position when the market goes down to 30, 35, and just do a cost basis from there. Or maybe just leave my position now and just add when it goes to negative 35, which I don't like because I'm not a good investor. I don't like a lot of. In my swing kind, I always try to be, if it's not green in the first day, I just try to cut it or cut a large portion. Anyway, so how can we benefit moving forward? Theoretically, when we feel the vaccine is here, it's a horrible idea, but we could get long-term puts. But the time decay may not make it profitable. Could short calls, more than likely could short equities. I'm just gonna have a small portion of this. Oh crap! Oh crap! I just realized I have very small, like 1/20th size short UVXY. But the beautiful thing is the time decay should fade it off. I'll cover it. It's not a big deal. So that's how we could benefit from this. When we see a vaccine or something, it doesn't mean market's gonna go up really high. It would just mean that market will pull because because there's going to be an economical factor into this. So yeah, amigos, long video. If you guys benefited from it, click like, subscribe. Let me know if you had any questions. If you want to see more stuff like this, let me know. I'm trying to make a little bit of series. Check out the other stuff. And best of all, if you benefited from this, share it with somebody. And if you have something that I could learn from, let me know in the comments below. And let me know what your thoughts are. Do you guys think actually that big rate cut, where now the interest rate is 0 to 0.25, is that gonna push the market higher? I made a video about it, but in summary, I was like, I personally don't think so, but I could see it, but I don't think so. I think it would have to be something to do with other aspects of rather than the financial. Okay, amigos, take care. Have a wonderful day.